Well, thanks for joining us at the Impact of Emerging Technology on Institutional Investing panel. That's a big, long, broad title. We're going to narrow it down a little bit. We're going to focus today on how institutional investors and asset managers engage with each other over digital platforms. And I have an illustrious panel here joining me today who can discuss just that. I'll let them introduce themselves. I'll introduce myself, and we'll get started. I'd like to first introduce Dan Connell from Greenwich Associates. Dan, can you tell us, when did you first use a social platform in your professional life?
That's different from who I am and where I work and what I do.
True, but relevant to the panel.
But very relevant to the panel. Relevant. It's going to be like that, is it? Okay. I think probably like everybody, the first social use in business, right, was through LinkedIn, right? How do you get on the site and post a resume and a picture and all of that? I think the real, I don't know if that's use. I think the real use, if I go back, this is probably, I don't know how many years ago now, trying to recruit in New York City for technical talent. And we had recruiters, we were using Monster, I recall, we were using Dice, trying to get technical talent, getting very little feedback. We did one posting on LinkedIn for developers downtown, and we got like 150 resumes, and now we didn't know what to do with ourselves. But that was sort of the first real interaction with social media, and you get a real business response from it.
Great, thanks so much. And next we have Kerry Ryan. Kerry is the head of web services at Legg Global Asset Management. And Kerry, would you mind telling us a little bit about how you started out using social platforms in a professional context?
Yeah, I would say just like Dan, I mean, certainly LinkedIn was the channel of choice. I kind of got on it very kind of innocently. I had a friend of mine who worked in technology and said, you know, you have to get on this new website, LinkedIn. It's great. You can be connected to all these individuals in our industry. And I said, okay, well, she sent me an invite, and I accepted the invite. And I could see that she had all these connections. And I basically searched and found no one I knew. So I started really, that was my engagement to kind of build out my circle and really, you know, take what wisdom she imparted to me of why I needed to get on the platform. And so my first real introduction was to bring a lot of my friends and colleagues onto the platform. But interestingly enough, now it's a lesson that I say each and every day, because for months I had my page open with very basic information and no photo, which is now something I chastise everyone I know, saying, you've got to have your photo on your LinkedIn profile. So that was my first foray into professional social media.
Excellent. So lots of making connections with other people in a professional context. And Tom Libretto is Global Head of Digital at JP Morgan Asset Management. And Tom, I'm going to ask you the same question. Tell us about your first social experience professionally.
Excellent. Well, I've had 3 minutes now to prepare that answer. And as I think back, it was outside of the asset management industry. In 2006, I worked for Nokia running digital for them. So it may be heretic to say, but our first foray into social media, truly from a consumer engagement perspective, was Facebook. And at that point, we were one of the first to put a brand page up and begin to develop not only fans and followers, but true secondary and tertiary armies of advocates for our brand at that point. Now, I think that, you know, as LinkedIn started, as Dan and Kerry mentioned, broadly from a professional networking heritage, the lines are now, I think, blurred. We're able, I'm happy to say, to do many of the same things we were doing in 2006 from an outbound audience engagement perspective on Facebook within the LinkedIn environment, and it's exciting.
Terrific. Thanks all for sharing that. And I'm glad we had a little bit of an untraditional opening to the panel, because it seems that this is a little bit of an untraditional channel for our industry. I forgot to introduce myself again. I told Dan I was going to do this just beforehand. My name is Alyssa Gilmore. I'm your host for this panel, and I work for Bloomberg as the Global Head of Analyst Relations. So now that I've taken care of that, thanks, Dan. I'd actually like to do a quick poll, just a show of hands in the audience. We're talking about using social platforms. How many, just raise your hand, if in the last week you've used a social network to either share or gather information that would help you make an institutional investing or institutional investing relationship-oriented decision? Show of hands.
Certainly have.
Do share or search? Okay, good. So looks like about half the room. So I think that there's a lot of interest in this topic, but not everyone has dipped their toes in it yet. Dan and Greenwich Associates recently teamed up with LinkedIn to do some research to study how institutional investors are dipping their toes in this and using social networks to make decisions about their institutional investing relationships. And Dan, if you could take us through some of the key findings of that, that'd be great.
Happy to do so.
Great, thank you.
So yes, we at Greenwich Associates did team up with LinkedIn and let's get by that guy. We kicked off some research to answer these questions, right? So the first thing we wanted to get to was from a digital resources perspective, how has the use of digital media and digital resources permeated into the institutional investor environment? And then secondarily, drill down a little bit to specifically talk about social media platforms and what is the penetration of social media platforms and the use cases thereof. And then lastly, examine not just the use cases, but what came out of the use of social media and what decisions are being affected and how important has that social media interaction been for the institutional investor community. So a little background on the methodology. We conducted this survey towards the end of last year. We went out and talked to a little over 250 institutional investors. So institutional investors, just to define, public and private pensions, insurance, foundations, endowments make up the majority of who we talked to. We did this on a global basis, so we had about 100 in the US, similar number in Europe, and about 50 in Asia, plus or minus. And then we also did about 30 follow-up phone calls with those folks that we did the initial research to get more clarification and more understanding about specific use, and that permeates through the research results. To give you an idea, we had about 2/3 of the respondent base considered themselves to be the primary decision maker at that institutional investor, and the other third was an influencer. And that was a break point. If you weren't one of those two, then you really weren't asked to continue with the study and the participation. And then lastly, the criteria was that you had to have had some interaction with a digital media source over the last year. So we made that fairly broad, but if you were hiding under a rock or living in a cave and didn't access any digital media at all, then we stopped it there. And to give you an idea of we started with, I think we touched 277 individuals, and 256 passed that criteria. So we had a very good target, and very few fell out at the end of the day. So I thought we'd go through some of the high-level results. And again, if you have any questions, please, even as I'm going through, feel free to raise your hands, ask questions, and also happy to share the results with everybody and anybody if you want to pop me an email afterwards. So what we found, not surprisingly, was that the vast majority, 95% of the population, have been using digital media sources in their professional life. And that, let me define digital media sources versus social for you. Digital media, we said, was wallstreetjournal.com, ft.com, bloomberg.com, just to throw a pitch for Bloomberg again, or company websites, blogs, those kinds of things. differentiated from social media, which we defined as LinkedIn, Facebook, YouTube, Twitter, Google+, et cetera. So 95% of the audience has been interacting with digital platforms over the last year. The thing that was surprising was that 77% of that audience said that they had also been interacting with social platforms regularly over the last year, and we found that to be higher than what our expectations were going in, right? And if we drill down a little bit as to how often they were using those social platforms, 80% of those folks, specifically for the LinkedIn positive responders, said they were using the platform at least weekly, and I would tell you that the vast majority of those were using it daily, right? So a tremendous penetration there. And I'll go back and give you one more stat where I said the 77% of respondents were using social versus the 95 for digital. If we break that 95 down and say, hey, just for news sites, the Bloomberg's, Wall Street Journal's, FTs, that number was 78%. So it's actually right on par with the institutional use of news sources. Social media is right on par. Found that to be an astounding result. Okay. Next, we asked a set of questions around what the acceleration has been in their use of social media. So how has that changed over the last 12 to 18 months? And then how do you expect that to change again over the next 12 to 18 months? And the responses came back, as you see. 40% of the audience said that they have increased their use of social media over the last 12 to 18 months. Probably not surprising. But an even higher factor of 44% in North America anyway said they planned on increasing that use again over the next 12 to 18 months. And in total, if we take those folks that said we plan to increase or at least stay the same, it was around 98%. So a very small percentage of folks came back and said we're going to cut back on our use of social. Guess that makes sense, but still a very high number. Okay. Next, we asked a set of questions around, so okay, you're using social media, but what for, right? And these are the top 5 reasons. I hope you can read them up there. These are the top 5 reasons or use cases. So going and looking for timely news and events and those kind of things. And you can go across and see the top 5. The interesting thing on here is we also asked, who did you use and what platforms did you use for each of those? So for example, in reading timely news and events, Twitter was not on par with LinkedIn, but they were fairly close, right? And by the way, LinkedIn was far and away the leader in every category. The only one that came close was the timely news and events for Twitter. Even so much as when folks were doing deep subject matter research, I think my recollection is LinkedIn came out 4 times higher than the next social platform. So LinkedIn is clearly the predominant platform, and others are there, right? So folks are using YouTube for educational video is the main purpose for YouTube, but it does get a lot of mentions. Facebook got a lot of mentions, right? But what I would tell you on the Facebook stuff, to give you a little inside baseball there, is that when we did all of those follow-up calls, although Facebook is used and mentioned, the deep research using Facebook was fairly non-existent, right? Even to the point of, I can recall one response saying, yes, I use Facebook, but geez, if my boss ever came by and saw Facebook on my desktop, I think he'd probably fire me, so we don't use it that much, right? Those kinds of things. So after we asked what you use it for, we asked a whole series of questions to try to get to the answer of what has that use of social media caused you to do? So what changes have taken place? And again, you can read through the results. I'd draw your attention, I think, to a couple of interesting points. One is in that bottom right-hand quadrant here, all of those led to a move to have some type of an interaction with an asset manager. And in fact, if we took, my recollection here is if we take the superset of categories that led to an interaction with an asset manager, meaning It either reinforced a decision, it caused me to put an asset manager on my list, it caused me to go to their website, something to seek an interaction with an asset manager. It was just about 50% of the folks said the use of social media had caused a further interaction with a particular asset manager. So big numbers there. The other thing I would call out on this slide, I think, is on the bottom left, where something they found on social media was shared with a colleague or professional associate. And the interesting thing that I took away from that, though not quantitatively based but more qualitatively, is that I think if I went back 10 years ago and thought about social media, I'm not sure I would trust what I'm getting on social media enough to share that with a professional colleague and sort of put my name on it. And this is saying that that perception, to a very large degree, has changed. And I think the confidence level in what people are finding on social media has gotten significantly higher. And that I think that's really what that stat is telling us. So with that, that's a high-level overview of a very, very deep set of research. But the fact of the matter is that social media is already playing a significant role for the institutional investor. It's only going to get more prominent. And I know everybody in this room is obviously interested in that and to some degree probably working on making sure they're on top of that. But it needs to be a key component of the overall marketing and distribution strategy if you want to continue to be front and center to that institutional investor.
Great, thanks.
Is there a question?
My experience is institutional investors, when asked if you use social media, say, no, we don't need it, and it's not important. Obviously, your research disagrees. So is it possible that these institutional investors are contacting fund managers or dealing with different representatives on their own to get information about the situation that they bring to work, i.e., do it from home, do it, non-related to their business, just to gain background information, as opposed to being in more of a regulated mode?
Yeah, I think that's an interesting question. We didn't ask where they accessed social media from. So was it at home at night in front of the ball game and you were doing a search, or was it a deep in the middle of workflow in the office? However, I would say literally all of the follow-up calls that we had led me to believe that folks were using it daily in the office. It's a 9-to-5er, and it actually was part of their workflow, right? Even to the point of we came out of that with, I bet, a dozen suggestions for LinkedIn that were given to us by the institutional investor community of things that they would like to see more of on their platform. So that that tells me that they were actually looking at LinkedIn, for example, as part of their workflow.
Perfect, thanks. And we'll have some time for more questions afterwards, but I actually want to get Kerry and Tom involved in this conversation as well, because it does seem that institutional investors, according to the research, are looking to use digital platforms to get information on which they're basing some of their investing and investment relationship decisions. And Kerry and Tom, it seems that a limited number of institutional asset managers are really seizing on that opportunity. I think your research showed that as well, Dan. So I'm curious, and Kerry, Tom, whichever one of you wants to jump in, your firms appear to sort of be in the vanguard on this issue. You have developed programs. What are some of the things that you're doing to take advantage of that opportunity to engage with institutional investors over these platforms?
Yeah, I would say certainly for us, LinkedIn is our channel of choice from a social media perspective, and I think that's certainly congruent with the findings that Dan just summarized. We do see some great opportunities. We're able to get a very good lens in terms of who is consuming our content. We at Legg Mason are very fortunate. We have a stable of investment affiliates, the likes of Western Asset, ClearBridge Investments, the Royce Funds, among others, who are producing a lot of very relevant, timely information. And we use the LinkedIn our LinkedIn company page to publish that information. And what we find really, we find that the community that we're engaging with, through all of our efforts from a paid perspective are allowing us to really be very hyper-focused on making sure that we're getting in front of key institutional investors as well as key investment decision makers at a lot of our client firms from a retail perspective.
I would agree wholeheartedly. I think that what we've seen probably over the last 12 months more than anything is a synergy between our approach to reaching and engaging segments of audiences in the institutional and the retail space that previously we didn't have access to. So when we do customer segmentation and we look at where we apply our own wholesaling or client coverage over, we pretty much write that off as got that covered. And for the rest of the addressable market opportunity, we have found that using LinkedIn, either through our company pages or showcase pages that we've built out, gives us a forum not only to publish our intellectual capital and our thought leadership types of content that then drive further a user journey into our own media that ultimately down the line on a recency basis converts to real business. But we're able to hyper-target the right audiences and make best use of the media that we're flighting within the LinkedIn environment, or you even look at time of day, sequence of topics, and really analyze that so we get the best positive outcome from that engagement on a hyper-targeted basis. And LinkedIn has been both a great environment for us and a great partner working with us hand in hand on the data, the targeting, and the ongoing optimization. So it's been a fun time.
So you mentioned that you're doing a lot of targeting and that you're able to, it sounds like you're able to actually track some of the successes that you're having. Can you talk a little bit about, how do you measure that success? What does good look like? Like, how are you measured? Are there objectives against awareness? Are there objectives against, audience engagement, against assets under management? How do you track that?
I guess I'll start and I'll take that. And we've looked at, several different metrics. We obviously look, for click-through rate to, showcase are the people really interested in consuming the content that we have there. We also look at a number of engagement levers. Are they liking the content? Are they sharing the content? Are they commenting on it? We also have been working closely. Again, this is where our partnership with LinkedIn has been particularly effective. And how do we also measure our impressions? Because certainly we know that, for all of us that engage actively on the LinkedIn platform, there's a lot of good content coming through the feed. A lot of times you don't have the opportunity to really stop and consume the information, but you have a positive reflection of whoever's articulating something valuable. And maybe you might go back and read that publication or that article at some point later. But even if you haven't, we're finding that the impression side of things is very important too, in terms of promoting the Legg Mason brand and all that it brings to the institutional marketplace.
Yeah, similarly, I think we take a channel-by-channel approach to the way we metric and KPI performance. With our LinkedIn work specifically, we have different metrics that give us an on-off, sort of analysis, quick analysis, every step of the user journey. So it's both reach statistics or metrics like awareness, unaided and aided, down through once we see someone engage with our content and we're able to bring them to our environment, first-party cookie them, follow them around the web and other environments, and ultimately track how many positive engagements, which is another metric we use called HQE, high-quality engagements. How many HQEs does it take to land the first ticket, and then the second ticket, and then the third ticket? So we try to tree everything back to net incremental AUM generated from net incremental new client activity or acquisition.
Wow. I think it's amazing that you're able to capture those kinds of metrics. It sounds like there's a lot of value that you're able to create and demonstrate through these programs. So I guess I wonder, why aren't more firms doing this already? And maybe some of that came up in the research, Dan. Maybe you, Kerry, and Tom can weigh in on what are the hurdles to setting up these programs and running them the way that you are.
Before we go,
sure.
and these guys obviously will talk about the hurdles and what it takes to set it up, particularly in the asset management world. I will tell you that we find a wide variety of where folks are on that life cycle for use of social media. Everything from, gee, I'm just trying to get my website revamped, and social media use is like way beyond me. I've been fighting with my technology folks for a website redesign for 4 years. At one end of the spectrum to folks like Kerry and Tom, I think, at the other end of the spectrum. And I would say the shift is still probably left of center if we sort of looking at where that was in the life cycle. So these guys are far ahead of the norm from what we see, and we talk obviously to hundreds of asset management firms every year, and certainly all the time in our core syndicated stuff. So.
Yeah, I would say certainly in conversations I've had with a lot of my colleagues across the industry, I mean, I think there's probably a few reasons why, maybe there's been some hesitancy around jumping in fully in social media. I mean, I think first and foremost, there is a fair bit of skepticism, and when people think about social media broadly, how is that really going to move the dial for the business? So obviously, all the things that Tom was saying, metrics really will help inform that and, get more people to be aware of where the real power is in using these types of channels. I would say, secondarily is also around resources. Certainly, you can get your channel started, but obviously it's like any living, breathing organism. You have to, tend to it. You have to make sure I've gotten all of your content authors across the organization participating and working with you to author, meaningful and relevant and timely content, as well as really augmenting that with very smart listening strategies. You certainly just can't be publishing information out, otherwise you're just really on kind of a giant megaphone and it's not going to seem authentic. So having that real focus on listening what's being shared across these social communities is extremely important, and obviously a lot of resource into all of that. And I think lastly, I think this is not, I don't think unfair statement. I think, the compliance challenge is still there. I think we have moved the dial a little bit forward. I still think there's some ground to cover, given that these, social platforms are not websites in a traditional sense. They are really two-way communities. So thinking about the communication dimensions of social media is definitely, I think, probably still a challenge for many.
Yeah, agree 100%. The same thing. I think we see the main barriers to entry being internal compliance, I would call sort of interpretation of regulation as being one that is sort of a constant validation, revalidation, and moving that needle, as Kerry said. And then equally, it's not something that one can just put a toe in the water around. It has to be part organically of a larger marketing strategy or a distribution strategy in many cases, and bought in all the way from the top, or else it's going to be a pilot that may or may not yield benefit, but is probably doomed to fail if there's not that long commitment tied to it.
And you raised regulation, and I'm sure that's a question for a lot of people in this room as well, is, what is the impact? What are some of the challenges that you have in rolling out a program like this and in the regulatory environment that we have, and how do you negotiate that?
I think, probably one of the challenges that the velocity of the content. I mean, social media channels really require you to be very quick and speedy and, quick in your delivery of content. So getting, our compliance team to see these social channels with a really, truly a news cycle type of mentality is definitely a shift from where we are when we think about the reviews around more traditional type of print material. So that's certainly, I think, one set of challenges. And then I think also, I think as I spoke to, the kind of engagement side of things, knowing that there is kind of another voice on the other side there, and we have to make sure that we have some way of not just publicizing information, but we are going to be taking comments and feedback and doing something meaningful with them. So those I think are, two key challenges in that regard.
I'd add a third to that, which in our experience, particularly when we're dealing with markets like Singapore or Australia, Italy, Canada, that have very, very strict personal information privacy law on the books over and above what industry regulation exists in finance. we have to be very, very thoughtful up front and in many cases battle a little bit in terms of how we set up a program like this so that we're careful about what data we collect, where it resides geographically, what we use it for, and how transparent we are in what we do with it. So I think there's just an additional burden there, but it's something that every company or every industry, frankly, has to deal with.
All right, well, thank you. If it's okay with you guys, I'll take a little break and see if we have any questions from the audience. We've covered a good amount of ground. Oh, we have some folks over here.
Hi, I'm Mark McKenna with Putnam Investments. Thanks so much for sharing your time today. I have a question that I think all of you could perhaps answer. LinkedIn has probably turned you on to new sources of information, thought, etc. As you go about your day, as you go about your day, can you talk to how it's changed your viewing of content and readership, in particular perhaps you, Dan, in terms of where you spend time and what you found in the way of blogs, things that you wouldn't have found otherwise without going through LinkedIn and the network?
Well, it's a great question, and I was actually thinking about that. We do a tremendous amount of publishing ourselves because we do lots of research and write white papers, and that's sort of how we make a living, and which is a little different from where you guys are, and you guys do much better tracking, and now I need to get to these guys afterwards. But we've done some studies as to how many requests we will get if we use different platforms for distribution. So maybe this will get to your point, right? So if we just publish regularly to say a closed mail list and then put it on a blog, we know what our response rate's going to be. When we started posting to LinkedIn, we get 25 to 30% better response rate, right? When we added LinkedIn and Twitter, that went up another 10%, right? So for us, we get a tremendous benefit by posting content on LinkedIn. It goes to an audience that we want to get to and that's following us specifically, so it's relevant content. So we've had a tremendous benefit from LinkedIn, not outside of this whole relationship in the study, just from Greenwich Associates using it as a publisher.
Yeah, I would certainly agree with that. Certainly getting traffic to your own firm's website, as we all know from an asset management perspective, is a challenge, in this age of information overload. But what we find really interesting about the LinkedIn platform is that it really provides, through the update stream, provides you with all relevant information really based on, your title, your seniority, your geographic location, and it's certainly very effective as a data aggregator. And we're finding also very much congruent with what you're saying when we overlay active participation on Twitter. That really helps heighten the engagement that we're getting as well. Really also because from a Twitter perspective, we're very much focused on that channel from a PR or outreach perspective. So we're finding that if we're very successful in our efforts there, it then translates to future engagement on LinkedIn as well.
So I'll give you a different view just personally. I'm not on the investment side of our business. I'm on sort of the marketing, technology, and data side of the business. So I spend a fair amount of time. I don't know on a percentage basis what that is in a normal day, but I have LinkedIn open on one screen. And I'm looking, it does take a little bit of time to set up the influencers you follow, the brands you follow, the people you trust that have expertise in a subject that's relevant to your particular job or your role. And that's sort of an evolving sort of configuration that you'll do forever. But very often something will pop in my feed that sparks an idea. I grab my team, we get into a room, we whiteboard against whatever that inspired, and I find that actually generates ideas. Some of which are good, some are bad, but it's sort of a catalyst.
Yeah, funny that you say you keep a LinkedIn screen. LinkedIn is open all the time on my desktop, right? And to be fair, Twitter's open all the time on my desktop too, somewhere, but it's not a, gee, I go to it if I need to, it's always there, right?
Any other questions from the audience? Got one over here.
Dave Lefcourt from Eaton Vance. Do you segment content? Do you create multiple versions of content, one for the retail, one for the institutional, or is that an aspiration, or do you just do one voice for each channel?
Yeah, I can answer. On our side of the business, we try to repurpose as much as we can, but acknowledge that there's a wide sophistication spectrum of investors that exist, at the within retail all the way up to the most sophisticated institutional investors. So that doesn't always work. So we have content strategy streams that address both audiences and subsegments within those audiences, so that we have a pipeline of content that we know will be relevant at some point in time, whether it's driven by a macro market event or something that we're seeing from just our data analytics is popping as an interesting topic. We've got that stable of content ready to fire through multiple channels, including LinkedIn, that will address those audiences, their sophistications, and ultimately the objectives that they're out to achieve.
Yeah, I would say from our standpoint too, it's all about repurposing the content. Even when we think about taking content that we have on the LinkedIn channel and how do we publicize it on, say Twitter or, elsewhere, we really try to repurpose the content as much as we can, but still, where needed, tailor it. Obviously, the LinkedIn platform allows for maybe a lot more than just a headline. So we want to make sure we, take advantage of that. And then obviously, as we all know with Twitter, you have to be very short and succinct, and you want to make sure if there's an irrelevant hashtag, you have that in there. And then obviously leaving space to ensure that if someone is going to retweet your content, they can put their own kind of comment towards it, which really we found very helpful in terms of further promotion of the content.
And Kerry, you're talking about sharing content, and I wonder, when you're sharing content, is it all your unique content? Is it all proprietary? Do you ever use these channels to share other people's thought leadership, other third-party content as well?
We have just started selectively using the platforms to showcase some third-party content, with obviously some of the major news sources that we will partner with, like a CNBC or a Bloomberg, where they are, really mentioning Legg Mason, talking about, a different idea or a different theme, or if we have a portfolio manager speaking for one of the publications, we will publicize that on our LinkedIn as well as on our Twitter channels as well. And we're finding that to be very effective because it's not all about our own content, our own story. We're actually using it as a means to showcase kind of the thoughts and ideas of others.
Okay, great. And Tom, same kind of approach?
Yeah, similarly, we have not gotten into. We are not a content syndicator on behalf of others. But to Kerry's point, yeah, we absolutely do pick up coverage that happens on our brand, on our people, and attempt to amplify that through channels like LinkedIn, Twitter, and others. Yeah.
Okay, great. Any other questions from the audience? All right. Oh, we have one right here.
Hi, Dan Butcher from Source Media. I'm just curious, LinkedIn is explicitly a kind of a business social network, whereas Twitter is a little bit more of the Wild West, where people use it for different things. A lot of people just tweet about random thoughts that come into their head. There are quite a few people that use it for professional reasons as well. And obviously, you guys have your professional Twitter feeds that kind of has the content that goes out from your brand directly. But I'm just curious how you handle social media usage of individual employees, and if you have company-wide guidelines for those, or how that works at each of your firms.
Yeah, Joe, let's start. So yeah, we have a fairly, as you might imagine, robust internal company social media policy that 2 years back was ultra restrictive, to the point that when it went in play, virtually every 260,000 employees were out of policy. That has changed over time as internal education has materialized. But I think that we're still in a place where internal employee or individual use of those platforms is still a frontier yet to be breached. And we, for example, we have company Twitter handles that are compliance approved, and we use those to distribute our content. But we do not endorse employee use of personal handles to communicate on behalf of our firm, as an example.
We're probably a little different because we don't have the same regulatory overlay that asset management firm may have. So, and we are sort of in the business of trying to build rock stars from an analyst perspective, because that's how you're going to get following. I would say we are, again, one end of the spectrum to the other. We've got some folks that are very good and extremely active, and if you take Twitter, and I'll take a Kevin McPartland, someone you know, he'll be, I don't know, 20 to 30 tweets a day. I mean, he's pretty active. There are others that we have that are long-standing consultants with the firm, extremely well-versed in the industry, longtime practitioners that we can't even force them to get social media into their brain. And even though we say, look, it's going to make you that much better, that much more popular, that much more followed, it's like pulling teeth. So I think it really depends on the individual for us. We got some guys that are really good at it, and some that are not so much. Yeah.
I would say that probably the caveat would be that in some environments, and LinkedIn's a good example, we've created an internal ambassador program where we train individuals who we want to create sort of brands around themselves as market strategists or portfolio managers and the like, to thoughtfully communicate on their ideas, their thinking, and use their own personalities as they interact with the wider network. And that's been successful. So that bodes well for moving the needle even further.
I think we might have time for one more question.
You might have to ask it.
I might have to ask it. So I will. How crazy are we going to get with social media platforms and institutional investing? Are we going to start to see a Legg Mason IG stream? Are we going to have a JP Morgan Asset Management Snapchat anytime soon?
That's a good question. Now, I think, right now we are still in early days. I think even when we think about LinkedIn, I mean, we've really only been very active on the platform for maybe about a year and a half. So I feel like we have so many, roads to blaze when we think about LinkedIn and, all the products that they're building on the platform. I'm thinking of, Lead Accelerator and Sales Navigator, and we've barely even scratched the surface on how we can harness those tools to help, what we're thinking about in social media. So I'm not sure if we're, things like Snapchat and Instagram and Pinterest, interesting, obviously hugely popular social channels, but, certainly, we'll always keep ourselves, an open eye to what's going on with those platforms. But, certainly right now our focus is very much focused on the big social platforms, with obviously, LinkedIn being at the top.
Okay, great.
I think that's certainly representative of where we are, I believe, as well. I think that it comes down to knowing, and continuing to learn more and more and more about the audiences you're trying to reach. And as demographic shifts occur, as online media consumption behaviors change, that we are going to have to move and change and adapt and try, test, fail, learn. In a variety of environments that we probably wouldn't even contemplate today. So yeah, very much keeping our eye on everything, but with a keen eye on where are our clients interacting and knowing that we have to be there.
Dan, maybe a last thought on that from you?
The only thing I would say is with respect to call it after the big four, in terms of mentions, we got literally zero. So if you, Snapchat was sort of funny, but maybe not, right? Because you're really wondering where that's going to go. Not one checkbox, not one mention out of 0 for 256, which is sort of what the batting average is for my Red Sox these days. But it's still not it's not very good. So I don't think we're going there anytime soon. I think there's a long way to go just in the major platforms that we have today.
Excellent, and that'll have to be our final word on the topic. Thanks so much for joining us.
Great. Thank you.